You're watching Business Lunch. I am Nisha Poddar and with me is Mangalam Malu. Mangalam, good afternoon. So it's looking weakish again today, second day in a row. Nifty 50 has been finding it difficult to hold on to the 11,000 above levels, and at the moment 0.4% down on Nifty 50. As far as the big boys go, it is clearly the types of ITC as well as Larsen and Toubro which are really dragging this particular index down, while on the other hand the trend has been similar. It's some of the IT stocks, some of the key bank, the good quality bank stocks, as well as the relief rally in the auto segment. These are the three factors which have been keeping the markets a little holding on tight and fighting for the bulls. It's the mid-cap index, which is now almost 1% down, has been hugely underperforming, and therefore the market breadth has been hugely negative as well, Mangala.
Absolutely, Nisha, we'll keep an eye out on that. The mid-cap index actually has been underperforming for the second consecutive day. Yesterday, too, the index was lower by about 1%. And like you said, the advanced decline ratio, 3 stocks in the red for 1 in the green, does not look good. Will be interesting to see whether the 10,950 mark is held on for the Nifty or not, because over the last 5-6 sessions, we have seen recovery from levels between 10,900 to 10,950. But let's talk about individual stocks, all of them in focus. We start with the pharmaceutical pack. Dr. Reddy's, that's the one which is weak in trade today after the US drug regulator has issued a Form 483 for its Duvada formulations manufacturing plant with 8 observations. Ekta is joining us on the phone line. She's here with the details. Ekta.
Like you mentioned, Dr. Reddy's is in focus because their Duvada facility has received 8 observations from the US FDA. Now, remember that this particular facility had already been under the US FDA scanner. It had a warning letter which was issued in 2015, and it was only lifted in Feb 2019. So there was some amount of relief on that particular facility. But with these 8 observations, there's a little bit of uncertainty in terms of what these observations could contain. We don't know the nature of the observations, but the quantum of the observations are large, plus on a facility which has had issues earlier. Just want to point out that there has been an inspection which has taken place on this particular plant after Feb 2019, which went off successfully. So that is actually a positive bearing for the company. But till we know the nature of the observations, it would be difficult to assess how, what the future of the plant would be. It contributes around $50 to $100 million and manufactures onco-injectables for Dr. Reddy's.
All right, Ekta, thanks a lot for that. Meanwhile, another stock on our radar, Anil Agarwal's Vedanta, which has won majority of the oil blocks auctioned by the government in last 1 year, is exploring fundraising options for exploration. Capital sources suggest that monetization or even another listing is actually being explored. Nisha is with us, of course, giving all the exclusive details. Nisha.
That's right, Mangalam. You'll remember that just a few years back, Cain was merged into Vedanta Resources, and now they are looking at again monetizing that particular company for their growth capital. In fact, sources with direct knowledge have shared with us that Vedanta is exploring 2 options. First, either listing of Cain again, and on the other hand, even divesting a minority stake in some of the oil-producing assets. So these 2 are the options that are being explored by the company. In fact, sources with direct knowledge have also shared with us that Vedanta has sought advice from some of the investment bankers, from some of the advisors. They have asked them to give a request for proposal to evaluate a listing option, or else also see the appetite in the market for exploration capital of oil blocks. Now we understand that in oil and gas space in the country, it's only the oil producing assets which have been valued where the investors really come in. Whether or not the investors can come in for exploration needs to be seen. So these are the 2 options. Remember, the fund requirement is going to be huge. Over $600 million is what the company requires over the next 3 years for the exploration of these blocks, and the majority of them that have been really cornered by Vedanta Group from the government's auctions. All right, so that's about Vedanta's fundraising plans. On to another important development. And this is coming in from CG Power. That's locked in lower circuit for the second consecutive day after the Risk and Audit Committee raised several flags yesterday with respect to the undervaluation of the liabilities and also fraudulent transactions in the company. Now, earlier today, we spoke to Amit Tandon of IIAS to understand the scope of misstatement as well as the next possible steps in this corporate governance issue at the company.
Once you start digging in, you are going to find something more. And one of the comments which was made in the letter is that we will do a forensic audit. So this is things which have been unearthed without a forensic audit being put in place. Once you do that, I suspect you will find a little bit more there. Now, how much more is difficult to say because the size of the problem, my sense is it's already, when you kind of add up the numbers, adds up to about 3,000 crores, which is higher than the net worth. Assuming that there is a good management team in place, you can hope that there is some kind of path to salvation.
All right, let's move on to a CNBC-TV18 exclusive. We understand that Max Life and Axis Bank are in discussions to renew the bank assurance partnership. Yash Jain joins in with the details. Yash.
Well, Mangalam, absolutely. This is a very important development specifically for Max Life Insurance and Max Financial Services. Just to first, before I get to the point, just to explain the structure to you, 97% of the business coming to Max Financial Services comes from Max Life Insurance. Also, 57% of the new business premium which Max Life gets, that comes from the bank assurance network which Axis Bank has. Now, do remember, the bank assurance partnership between Max Life and Axis Bank is valid till 2021. There has been a lot of uncertainty amongst investors, amongst market participants, amongst analysts with respect to whether that bank assurance partnership would continue beyond 2021. The latest that we are given to understand from our sources is that both parties, that is Axis Bank as well as Max Life Insurance, are constantly engaging in conversations with respect to renewing that bank assurance partnership. In fact, the talks between the two parties are in advanced stages at a point where the terms and conditions of the renewed bank assurance network are being discussed at this point of time. Of course, a source also going forward and indicating the timeline in terms of the next 2 to 3 months in which a new term sheet could be signed between the two companies for that renewed bank assurance network.
Right.
Do remember that in FY19 that bank assurance business grew by 18%, and as I said, 57% of the business for Max Life comes from Axis Bank bank assurance partnership.
All right, an important exclusive there. Thanks, Yash, for getting that for us. It's time for a quick break on Business Lunch. But up next, consumption environment slowdown impacts the FMCG stocks. More on that when we return. Stay tuned.